Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Marty. How we do it in YouTube? Thanks, Ryan. Appreciate it. Well, good morning, everybody. Thanks for visiting the Trader Lab today. I'm Tom B. And this stream is about integrating Bookmap Orderflow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars and, of course, the actual community itself, where traders of all different backgrounds, all different experiences, from newer developing traders to very experienced traders leverage their collective experience in order to do better. The Trader Lab is built on the idea that the business of trading is very much like gaming, in the sense that we have no control over the outcome of any trade, and it's not about predicting. And I like to start the stream this way to give everyone a sense of what this is all about. The business of trading is like the same way casinos operate. They only play games, if you will. Let's just compare the games to structured trades. They only play games or structured trades, if it was us, that have a statistical edge. They do not make up random games. They don't change their behavior. They use something called anchored inputs. So they always play the game the same way, but they have no control over the cards coming out of the deck or how gamblers play the cards. So that is the randomness and continuing uncertainty of the outcomes. And the gamblers do get paid. And in fact, the gamblers get paid a lot. But over a large sample size, the casinos are extracting the dollars from the gamblers. The variable in that is that they don't know which hands. So when we're in an environment that's similar, which means we have no control over the other participant behavior, the only thing you do control is when you interact, what you do, and only interacting when you have a statistical edge. What that means is we are really using a proven business model, which is casinos or gaming, and sitting hopefully on the casino side of the table versus the gamblers. So can we separate ourselves from gambling or gamblers? And if we can, what does that do for us if we actually have a statistical edge? So the business of trading is about creating edge, only interacting or playing games that have an edge, and understanding that even though the environment's random and completely uncertain, which naturally messes with our psychology, which is another topic that we work on continuously in the Trader Lab, all of these elements come together, and that may be the basis for you building sustainability and a career in the business of trading. And then, of course, I have to say past performance is never indicative of future results. Like everything, you have to vet these ideas, create a trade plan that works for you. Hope you're getting something out of this, and of course, welcome to the Trader Lab. Let's take care of business. I'm managing a trade I have here, so I've got to keep my eye on the ball, as they say. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Thanks for visiting the Trader Lab again. Remember, this is not a trade calling room. This is for educational purposes only. And what I do in the stream, this is based on 60 PDFs that you can download at no cost, as well as access a library of webinars in the Trader Lab community, 60 PDFs of structured trades. So we're going to show you structured trades. Now, there's a lot more you can do, but this is kind of call this the basis of learning to understand how the market works, why it does what it does, and how at times you might get in alignment with it. And this is what these structured trades look like. You can see there's a lot of that. These are actual trades I've took, and a lot of integration and description. I'm not a vendor. This is not one of those trade calling rooms. This is for traders to actually develop a business. And if you understand and get educated as far as how the business works, you might have a better chance of sustaining a career, if that makes sense, and if that's your interest. Now, the other element here is this is auction based. Auction is all about how does the market work, why does it do what it does, and how can you get in alignment with it. That is the gaming process. So let's go take a look now at the current condition of the market coming in. Okay, the ETH was in balance. That means two-sided trade, sloshing around both sides of the overnight volume point of control with an upward skew. Now, we do know the trend is up. We do know that there's frothing at the mouth in the sense that the buyers are all over it. And that suggests a couple of possibilities. And I post this in Trader Lab. I'm not going to go there right now, but I want you just to see what the Trader Lab looks like here, just so you can see. Let me move this out of the way. There's a lot going on in Trader Lab, and it is a community you're all invited to, and there's a lot happening. Screenshots discussing trades they put on, research that's being done, all kinds of interesting stuff. So if you haven't visited here, I'm discussing different processes, something called VPAC migration, which we're going to talk about. Here's something else, 7:41 a.m. Central. At the moment, we're in balance. The market has been galloping since Friday, and the UOM, University of Michigan we might anticipate some squaring up ahead of the weekend also. We need to be aware of potential inside day, which is possible, consolidation, developing, or even a test of yesterday's high or low, given the gap open below us. So we have a gap below us from yesterday, breakaway gap. I did a stream on that. And then we have the possibility of taking out today's high in a continuation, or possibly coming down, washing out some longs before the end of the day. So those are the variables in a random environment. Be patient. The market is very long. That means long. All right. ETH overnight high appears to have a weak high to observe. Overnight low tested yesterday's IB high. So you got to observe that. So that was suggesting upward skew. Possibility to first take the ETH high out. That's this. Then yesterday's high. But being aware that we could also rotate down. So there's, obviously there's always something, right? So what is this? Yesterday's naked volume point of control. A naked volume point of control is the highest volume from yesterday. And in this configuration, it has about a 70% probability of getting taken out, notwithstanding the ETH low tested yesterday's first hour's high. That's an important, call it a landmark. So that gives us a bullish potential. And again, who knows, right? So we get our RTH open. Now this is called the ETH overnight volume point of control. It is, if this is the highest volume from yesterday's RTH, and we're in two-sided trade primarily in the ETH, this is our retail price. That sets up a potential test here. And if we get under here, test here, test here. So that's one side of the proverbial coin. And we're still looking at ETH here, okay? Now, because you have to have the lay of the land before you do anything. Then we have the ETH high, and I posted this. We have a weak high. If you guys look at ETH, you'll see that there were a bunch of tops that we were banging on. And when you have, like, we reverse off a high, we come back, we reverse off it, we reverse off it. Think of it like banging your head on a ceiling. It's not a strong high, and many traders think, wow, there's a lot of resistance there. No, what there is exhaustion there. And when there's exhaustion, you'll counter-rotate. But the more times you come up to a level, the more potential there is to break it. So that's why I posted weak high. Then, what else? Yesterday's high. So the trend is up. So this is kind of where we're leaning, okay? And then we have to start looking what's above us. Now, we're in thin air. We're kind of up in the ozone, get some oxygen. What's our next strike price? Well, we got a strike up at 20, and we have a strike at 25. And then after that, you're kind of just sitting out there. Now, we do have another target and maybe somebody could do the math for me. The distance from the first hour's high to low, what is 50% of that range? And if somebody in Trader Lab will post that, then I can give you another potential target. And it's not a trade recommendation. It's called the 1.5 IB stat, or IB high stat, 1.5. So would somebody do the math for me so I don't have to take time here and do it? Now let's get into the RTH Open. If you have questions, please post them. If you're in YouTube, and welcome to YouTube, thanks for visiting the Trader Lab today. If you like what you hear, if you have any comments, please give a thumb up and hit the like button down there. Subscribe so you don't miss anything. A lot of these streams I do are exclusively for Bookmap, Discord, Trader Lab participants, and there's no cost to become part of that Trader Lab community. And it's a dynamite community. That's all I can tell you. There's research going on, a leverage of a collective experience of traders with all different backgrounds, methodologies, and time in the business. I think that's a good place to be, don't you? It's not a trade calling room, because what this is about is you being provided guidance and developing an understanding of market mechanics, taking the structured trades I share here as a template and overlaying it on top of a proven business process, which is gaming, and then building out a business that has a statistical edge. One of the things that's very difficult for us as mere mortals is to control our fear. And the thing about fear is it's based on operating in a random environment. In other words, uncertainty. We are not wired for uncertainty. We are wired for predicting and being right. Nothing doesn't exist here. So how do you get around that problem? Well, in my opinion, you get around the problem by having a business plan that has a statistical edge. And that's how you get control over your emotional state. You cannot eliminate your emotional state. Does that make sense? What was that level I'm asking for, guys? 1.5 IB? What is that? I'm sorry. 60, 25 and 3/4. Was that the target? Could you guys confirm that? So 25 and 3/4 is our target up here. It's a measured move. Where'd it go? 25. Sorry, guys, not close enough. Better get the scalpel out. Good work. Thank you for sharing that. So, guys, this is what Trader Lab is about. It's about statistics. 25 and 3/4 is our measured move. 25 is a strike price. I will say, and we'll come back to this later, my target was here. And then I had a couple runners, which got taken out, which is okay. And I'll explain this one to you when we get to it. But in the meantime, we got to start where we start. So here we are, RTH Open. Again, please post your questions. And I can't see them while I'm narrating this, but I want you to see structured trades. Now, obviously, I take trades that aren't structured trades, and I'm going to discuss some of them with you if I have time. And some of these trades, hold on a second, I got to pay attention to something here. I got to make sure I don't put a trade on that I don't intend to do. Okay. I can't trade while I'm streaming, just so you know. Called multitasking, not so much. So this is called VPAC migration. Now, I have written a lot about VPAC migration. I posted a special, some information about it in the Trader Lab this morning, which I hope everybody in Trader Lab, please take a look at that. I posted it before RTH Open. It's about something I developed called VPAC migration. The other thing is I did a specific webinar on it that is available in the library, and it's really a pretty neat tool, but it's advanced. And the thing about most traders start with the advanced stuff, and they really got to understand much more before they start messing around with advanced processes. I always suggest developing traders when they come to Trader Lab that they follow this process or structure, but they don't trade it. The problem with this structure is you have to understand the context that it's happening in, which developing traders typically have no understanding of because it's not indicator-based, it's behavioral-based, price-based, and order flow-based. So you really got to come from a different place with it. The other part of it is it's fast. You know, this is 2 seconds. and you need to be activated here within 2 seconds or a second. Most mortals can't do that until you develop something called unconscious competence. So I'm just spending a moment with this, because when you see this behavior, this is not a reason to engage. Only if you do the work so you understand. So I'm going to label this. I call this a variable high volume node. And let me just get it in here. So this is what I do. Now, I label things because this is going to scroll off and I'm going to lose it. So I put a little label on here because it goes off the chart. Now, what else am I looking at here? What is this showing me? This is the chart volume profile. It's showing me what only volume-wise is on the chart. So right here, RTH open, and I'm looking at all the volume right here. So this is high volume right here. It's called a high volume micro. I call it micro high volume. And what it is, it's very little. So it's a micro thing. And over here is the session volume profile. It resets at 8:30 my time, Central Time, for the open. And it tracks all the volume as the day goes on. And it's going to be important. This yellow line measures the volume, and it starts at 0 as the volume comes in, and as more volume moves with price. And when you get a consolidation, obviously there's going to be more volume here than when we're actually moving. Then we pause. So these consolidations create structure. So in this structure, if this is high volume, now let's take it to what trading really is, shopping. This is like, get your shopping cart out. Let's get some S&Ps. Well, if the price of an S&P when we start is here, and then the buyers move away and the sellers are pulling, then we pause. This delta, these buyers are more volume here than down here, says the shoppers, or there's more demand, possibly. So then we move away from it. What does it say? Let's just speak market. I don't use indicators. So what do I do? Besides sometimes asking myself, what do I do? What I do is attempt to stay in alignment in using order flow in a real-time process. So I'm not waiting for lagging or conflicted indicators. I don't do it because it didn't work for me. I mean, everything works sometimes. I created another webinar called Trader Groundhog Day. That's when you have a process that has random outcomes and you try to make it better or fix it, because everything works. If you had nothing, it would work. Okay. So too low. And where am I trying to go? ETH high. Over 90% probability, past performance not indicative of future results, that we're going to get here. So I think I want to be long. Don't you? So how do we get long? This is a long in the Trader Lab. This is a long in the Trader Lab. Now there's more. So now this is why you have to have unconscious competence. What does this say? Right here, I'm going to get into very microstructure. There's your high volume. Just watch the behavior. VPAC migration. Let's look at something consistent. Too low, too low, too low. What does that say? Now let's speak market. No indicator. Very much no indicator. What is my indicator? It is participant behavior. And order flow. So let's look at what's going on in the order flow. Right here, this is absorption. So I have this liquidity in the book. I get a seller. Now, it's very important. What happens now? Do the sellers overpower the buyers? Think Pac-Man. Or when I get VPAC migration, is that suggesting we're going to move higher and this seller is, so we had buyers here and they consume this guy. Now, right here, I don't know. And I'm looking at it. If it comes down, then I have to think about something different. I get VPAC migration. Let's keep watching. So, support, target. So, in the Trader Lab, this is your first indication of a move. This is VPAC migration. This is your support right here. This is a potential long. Now, right here, this is resistance. This is support. This is retail. Now, right here, it's like the teeth chatter, you know. Once we come up here, this is also a long. And your stop will go under here or under here. And you're going for this to scale. Watch. VPAC migration. Now, the thing to understand about this migration thing is the market can also find too high. So it's kind of like, yeah, I'll pay that. Well, I don't know. This might be too high right here. It comes down. Now your support's here. Your resistance is here. If I break above it and I hold it, I can go higher. VPAC migration. But at any time, if I cross below it, I'm going to come back and potentially test one of these levels. And part of the joy of trading is we don't know. Watch. VPAC migration. Where am I going? This. Weak high. Remember? So let's watch. VPAC migration. Support. Watch. Too high. Resistance. Support. Resistance. And mid. Lovely. Target. Okay? Everybody with me? So this is the first trade. Now I'm taking my time because where's my indicator? I don't have one. What was I doing? Following the auction. That's what I'm doing. And subject to your skill, and that's why I always say this is not a place for developing traders to trade because of the volatility and the acceleration and speed of the open. But you can certainly gauge, and based on the statistics in the Trader Lab, that's why we're going for this. So anyway, you get that. You got your scale, and that's the first trade. Now, where do we come? Let's come back here. Now, this is the retail price at the time. Let me come back here. This was our target, and this is the next target. And again, clueless. Believe me. Clueless doesn't mean ignorant. It means no rigid, fixed, myopic intent. It means continually open to change. So now if you're in Trader Lab, statistically, by the way, what is that statistic you're asking? Let me give you an idea, and you have to vet everything for yourself. But more or less, and let me just find it here. There's about roughly an 80% probability, past performance, not indicative of future result-ish, in this trending configuration, which is a bull market, that we're going to take out either yesterday's high or low. I don't know about you. I'm going for the high. 80% probability-ish. And you got to vet this all for yourself, of course. And these statistics are available in TraderLab. But they don't stand on their own. There's a much bigger piece to this. It's called context. And in case nobody's noticed, the context is up. And we're on a Friday, so we can anticipate profit taking somewhere in here ahead of the weekend. So we got to keep that in mind too. So too low. Why? You can't. This is where it was too low. This is our target. Now watch. I pull back. What's too low? Here. So what is this if you're in Trader Lab? An ad. Or if you're not part of this thing, a long. Where's your resistance? Right there. See that green line? That's resistance because in a microstructure. Now I'm going to go down in time frame. Now guys, I hope you find this useful and interesting. I go into detail because everybody wants to, I don't know, I'm going to say is identify areas of behavior. So if I'm not using an indicator, I'm using fractals, and it's not time-based. It is behaviorally based. This right here, chop, 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 break high, pull back, is a long, because that's microstructure. Let's look over here. Chop, chop, chop. This is high volume. I break low. That becomes resistance. Over here, this is support. The yellow line is your retail price. Notice what happens over here. I come where? This is the retail price, but now they raised the price. If I come back to the store where it was on sale and I'm looking to see if there's any on the shelf, and maybe there's a couple hidden in the back, there's not going to be a lot of inventory here because you couldn't buy it here. But you go back to the store, and don't be offended. I'm using very simple explanation to help you conceptually visualize what's happening here. And now I have the shoppers come in here, and you look at this little, let's just look. It's in alignment with what was too low because we left it. Up here is what is too high. The volume up here, which is right there, is the same thing in a shorter time frame that is happening here. So support, resistance. So if the trend is up and we have a 80% probability-ish of taking out yesterday's high, what would you be doing with that? Might you be buying it, or would you be selling this? Me, I'm getting long again, or I'm adding, or I'm doing whatever my plan says. This is my scale, right ahead of this. And why, do you ask? Because it was too high. So this micro high volume here is the same as that, right? But a shorter time frame. So when I come here, I get long, I scale here, and then my helmet is on because statistically 80% is here. Let's just see what happens. Look what happens. I get my scale, I get taken out of the trade. Now what? What do I do here? I get taken out. Now, what I say I get taken out, I'm going to say is if you're rigid and your stop is right here or even there, you're going to get taken out. But okay, you're out. So you had a scale and you get taken out and you get paid because you already got this. Okay. So you put a few dollars, in the wallet. Now, what happens at this location? Micro high volume is right there. So all we did, I call this a stop pick. Now, if you had your stop further away, you wouldn't be picked off it, but let's assume you did. How do you get back in the trade? Here, this is now resistance. The buyers come forward again. All we did was take these stops out, and you see the icebergs are back in here. Also, this red bubble down here is delta. What's delta? Initiators and stops, because they become market orders. So right here, going to zero, right? Except I break high. This was absorbed. This is now order flow. I break high. I'm now above my level, and I'm suspicious that it's a stop pick. This is a trigger. Where's my location to get long? It's right here. I get long. My stop goes under here. And where am I going? Back here. Scale. Same trade. All it is just what it is. The location is right there. There is no walls. If you have velocity, you're going to potentially exceed this. Now, why would it go up after this? Context is up. Statistical probabilities, which are just all they are, statistics. Stops under here. And here's the other thing about this. What was here? Buyers. If the market comes down here, is it possible that the buyers that were here that absorbed these sellers will reactivate if we come under here and they get absorbed? In other words, they come right back in again. See what happened here? 123 stops, icebergs. What happens over here? About 84 stops, icebergs. Absorption, what was there? Absorption, order flow. Trigger, trader lab. Test, long. For me, when I see this, my teeth chatter. I put an order here. I put a stop under here or a little further down under here. And I put my helmet on. Here's my scale. I hope I'm not giving you too much detail. Notice my scale. Same trade. Here to yesterday's high. Here to yesterday's high. Let's look at what happens. I get taken out again. I'm going, come on. You ever do that? Okay. So now what? This right here is now my resistance. And I got my sellers here. I have a variable high volume node down here. Now I'm all okay with this because I know statistically I have a possibility. Actually, I got to explain something to you. Well, maybe I won't. I'm going to stay with the longs. I actually took a short here, but that's not important because that's not part of our Trader Lab. But if you took this trade at Trader Lab, you'd be scaled here because that's the way we operate, and the stop would be under here. You'd be taken out. So let's come back here. So I have another variable high volume node down here. I got my open here. Now right here, remember, this is my resistance now because I'm below it decisively. So this is now resistance. The possibility is to come here because there's a high probability of getting over here. And once we come across like this, I'm kind of going, what's going on? You ever do that? But let's look at what we have here. So I'm looking at it, test down. So this is resistance. Remember, support can become resistance. So here's micro high volume. No clue. No clue. Resistance, maybe support. I don't know. Let's look. Where do I go? Break high, pull back here. Where am I? Does this look familiar? There, lower, don't know. Break high, this is resistance. Test, don't know. Think it's going to zero. Watch, trigger. I'm above this now. So there's two possibilities. This is support, but this is resistance. I got to get above this. I break. Resistance, right? I come back. Support. No clue. Break high. Change. Pull back. Long. And where am I trying to go? Let's look again. Scale. And same trade. And then here. And then hold. Where do I pull back? Let's come back. Where was the high volume? It was here. Support, resistance, in a different way of looking at the market. Support. Why? This was resistance. See the resistance? Right? See the support. Where do I come back? Here. Break high. Yesterday's high. What happens at yesterday's high? Profit taking. What happens over here? Support. What is this? If you're in Trader Lab, it's a potential ad, or you're just using it to manage your trade. Let's keep going. Now, here, now this, no clue. So me, long. And all I'm doing today, well, other than some other trades I take in between, is primarily longs. And remember, 25 is the primary target. 25.75, I think, was our measured move, but who's counting, right? You do remember that, right? Top of the stream. 25.75, wherever that is. I see we got there. Who knew? By the way, if you think we know anything, nope. I'm going to put this down for what it is. I did these yesterday. I typically don't discuss this. It's just too much in no time. So this is our target. I think it was 25.75, right, guys? Yes, 25.75. That's our target. And again, it's, it is what it is, right? How about this? Who knows? Nobody knows. So market's going up, looking good. This could be an ad right here. Watch. So what do you do with this? How do you manage your trade? That's a tough one, isn't it? Now, there's another piece to this. Statistically, now we had the University of Michigan pre. This is a substantial report. This is a market mover. It talks about inflation. It talks about the next year inflation. It talks about how wonderful everything is or isn't. But it's a pretty bullish report. And that's 9 a.m. Now, a couple of things to keep in mind. Typically, and this is just from experience and sense of smell, typically, if you're going to have a major report, you're going to get evening up and flattening out. What did we get? We didn't get that. That suggests the potential for bullish report. The next piece is we have something called the IB 30. The IB30 is a statistic, and you have to vet these for yourself. And I want to thank Rod, who's one of our Trader Lab participants, for coming up with this statistic. But there's approximately an 80-ish plus % probability that if we take out the first half hour's high, which is right there, then the possibility is we will take out the first hour's high, called the IB high, initial balance. So we take this out and we rotate. So right here, now what I do, and I'm not saying this is a good idea, I'm just saying these are things you can do. What is this? Let's come back here. Yesterday's high. Okay, so you get the yesterday's high, profit taking. Come back to the overnight high. Potential long launch, okay? 9 a.m. comes, we make a new high off the report. Right here is high volume. Now, I don't know. So if I'm managing this trade, let's look at this now fractally. This was resistance here. We break high, we come back. I'm going to start drawing these little white lines for you. This is how I slice the market up into what I call fractals. Too low, too high, resistance. Break above it. What happens to resistance? You know, becomes support. I come up here, going to the moon, Alice. 25 is by target, and 20 is a strike also, so we got to be aware of that. So right here, market goes up, and I have no clue. Right here, high volume node. Now, my software is doing this automatically, and this is being created not in Bookmap, but is being projected, if you will, using cloud notes into Bookmap. So this is happening outside of Bookmap. I use Investor RT, and there are a number of other platforms that will export levels. So what I know is this is support, and this can be either, well, subject to, let's just say it's not a short. Let's just say it's a trade management opportunity. So here is support, break high, trigger, break high, break high. No reason to think it's not going to continue. Do you? I don't know. Maybe you do. Me, not so much. So where's my structure? Here, break high, support. Here, break high, support, microstructures. Here, and this is support, break high, support. Right there. Break out, break down. So subject to how you develop your own trade plan and your time frame as you think of them, you could be out of this trade, or you have it down here and you're out of the trade. And then, of course, you have some choice words for those, whoever it was, who caused the market to go down, you know, those who plot against you. And then, since we have a statistic, a measured move up here, and we have a strike price, and the IB stat, which has over a 90% probability, what are we doing? We're going to get long. Questions before I continue? Thank you, Nikos. How we all doing in YouTube, guys? How you doing today on Friday, November 8th, 2024? Hope you had a good week. Trader Labs had a really great week. And if you're in Trader Lab, congratulations, those of you who are developing your craft and having success. And those of you who are still on the path and going through the learning curve and the development and the frustration, which is part of becoming excellent in anything, keep up the good work, because you're all getting better if you do the work. And we have to do the work to overcome and become competitive in this environment. We are competing against the smartest minds in the world. So support, variable high volume node. Now, where are we going? No clue. Let's watch. Statistics, over 90% probability we take out either the first hour's high or low, considering everything. And we did this, took out the first half hour's high. That sets up this. So for me, any counter rotations or stop ticks are opportunities to get long for alignment to here and then up to our measured move. If this is the high, we don't have it yet, but you can pretty much get an idea as we're moving along here that we're going to take out this somewhere, wherever it is. It hasn't been established, but the probability of taking out the first hour's high is now, I think I lost the stat here, but I think it's about 86% maybe. So where do we come? High volume node. I took a short. I don't want to tell you about it. Scale is here. So, and then I was looking for it to maybe come down here. And I ended up getting taken out of it. And all I got was this, and I got taken out there. Okay. So I got taken out. Now the market breaks up, and now I have to get long. And I've got this, this, and this, and this. Let's see the behavior. Long here. $9.30. IB stat. Take this out. So what I did is when we broke, got a long, another long. These are longs against this volume. You can see the volume there, high volume node. Resistance, you see. Now we're moving up. These green lines aren't here. They're still sitting on here because it's current. So what I'm tracking is the volume. So we can watch this, watch the behavior. And where's my target? It's here. So for me, and I'm flat now. So that was my last long. I got out of position. I took a short, and there's part of my brain that says that's a short because I can read it. There's another part of my brain that says, what are you doing getting short? So I have to answer that question. All profitable trades, but that's besides the point. So this now is over for me, not a recommendation. This is a measured move, right? 25-ish and a strike price. And they're selling up here. So for the moment, and this is not a recommendation, I would be short or flat. And since I can't take a trade, I am flat. Questions now. Thanks for visiting the Trader Lab. Guys, I hope you're getting something out of this. I hope you can see the value of understanding market mechanics, how it works, why it does what it does, and how you might get in alignment with it. And the thing I think that really, for most retail traders is a problem is using indicators. Now let's change things around a little bit. How do you use an indicator? Does it help if you understood the condition of the market to understand why we might take this out? Why 25 statistically? Why? Does your indicator tell you to do what? Can your indicator get you long in here or in here, wherever it was? I can't remember, but I think it might have been here. Or maybe down here. I've lost where I got long because I can't look, but these are all longs. So now, where does your indicator get you long or short? Now, I want to give you the answer to this. Most retail traders think it's a business defined by indicators and time frames. I did too. And I went way beyond that. I built trading systems when I used to manage dollars. And as a trend follower and a swing trader, there was no day trading. Don't forget, I started 45 years ago, 1980. Didn't have PCs, didn't have an internet. Kind of interesting, don't you think? So, so when indicators developed and they came out where we actually could get our hands on them, and I'm trying to remember, I think the first platform was something called ADP. It was an ADP platform called ComTrend. You actually had to run an extension cord from the Board of Trade down up to a place in Massachusetts, like a phone line to get the data. And that was a big deal. Very expensive also. And then there were technical indicators. Wells Wilder was a whole new thing. RSI. We didn't have volume, so we had something called unbalanced volume, which is basically tick based. But anyway, neither here nor there. So, and then I shared an office with George Lane. He created stochastics, so I got introduced really to oscillators, and then started, studying that. And I did think the Holy Grail had turned up, because wow, look at that, it crossed over. So I went down the rabbit hole of indicators, many as I can get my hands on to research, and they all work sometimes, which was really terrific. Except I didn't really understand market mechanics. I really was thinking that the indicators are going to tell me what to do. So after a number of years, too many years of doing that, I ran into this thing called market profile that a trader at this, a grain trader at the CBOT, Peter Stoudemire, created. And I was intrigued by it because some of the things I was doing had similar concepts, the auction, but I didn't have a full understanding, because I'm still an indicator guy. So I started exploring it, and I really thought I'd landed on the moon. There was no volume back then, so basically it was time-based, so that's market profile. But over the years, real-time volume became available, right? So then it became volume profile. But along the way, I was still using my indicators, and I started looking at this profile thing, trying to make sense out of it. And logically, it made sense to me, but I couldn't really trade with it. So I had a real problem with it. So I kept working at it. And eventually, I started seeing things that were different than the quote books and what the, chat and all this stuff. And I can't remember the first chat room I was in, but way back. And it was market profile guys. And very dogmatic, it's this, it's that, boom. And I'm doing research, and I mean by research, total immersion for years, and I'm seeing different behavior than what is traditional market profile. And I start talking about it and posting stuff, and instead of them going, hey, this is great, what is that? I got completely dismissed, and actually, let's just say aggression, because I wasn't following, quote, the rules. So needless to say, that only lasted a number of months, and then I just sort of, went and decided, I guess I got to do my own thing. And maybe they're right, I don't know, but I see something happening here. Anyway, doesn't matter. Let's look at this market. And I integrated a lot. Now, we didn't have order flow back then. We didn't have a dome. None of that. So, and back at the time, I'd have to call my guy on the floor and say, what's happening? Who's active? What's the volume like? All this kind of stuff. So that's what I used to do. And I would trade. I'd pick up the phone, and they'd hand signal my trades. And I used to trade volume because I was ended up managing dollars and building systems. So I had my own, had a clerk over there, was on the side of the pit, and all this used to go. So anyway, and back in the day, you had to write your orders on a ticket, timestamp it. I mean, it was just so archaic. They had the runners going around the pit. They'd be picking up the orders. I always got mine flash fills, but most other traders didn't. So just a little fun facts to know and tell while we're sitting here. If you have questions, please post them. I'm going to go take a look. This is a trade here in TraderLab called the IB continuation trade. Let me explain it to you. There's actually another trade here. I got to show you a couple of these. We have structure. Remember, I talk about structured trades, right? So let me find this. Break high, IB, pull back here, support. I don't have anything here. I'm looking for a long continuation trade. Here's the long right here. This is the IB continuation trade, structured trade in TraderLab. I took this one, got a scale. What I do, so you know what I do? I put a trade on, and whatever the distance is from my entry to failure is where my first contract exit is. So I'm buying the stop on my runner or runners. And since I have my IB, this is my target. Okay. So this is a structured trade. And I put it on. I tuck my stop up under here. I got taken out. Okay. Now comes down and I'm going, what's going on? Where's my support? It's over here. Break up, pull back, same trade. Put the trade back on over here. Stop initially goes under this micro volume, which is here. I'm just going to show you. So once it breaks here, so basically I'm getting long. This is where the trade would fail. So I'm getting long in here, right here. Stop under here. Palatable, not ecstatic, palatable. This is resistance. I get above it. This is now support. Let's just watch. And I posted this in TraderLab. I think it was like, 20. So this is the support. Have a scale. This is my target. 25 actually is where I was going. 24.75 actually. Right here. Got my fill. Lucky. Had no clue how I got filled, but I did. And where's our support? Here. Where does it come? Here. This sets up another long. Remember, microstructure is here. Support is here. Support is here. Come down. Now I'm flat. Right? Now this, I'm already streaming, so I don't have this, but I'm just looking. I haven't seen this before. This is a long. This was our target. Remember? Now this is a trade I might or might not take. I can't tell you because I have to see it, when it's happening instead of just going, well, this is because the structured trade's fine, but this is kind of out in air. That's the IB. This is the outside edge of this consolidation, low volume node. So this acceleration creates low volume area. It looks like that. So this is an auction right here. And the high volume is sitting right there. Think of this like too high, too low. Passive side is here. Sellers are there. Breakout. This is now support. Breakdown. Back here. So this is resistance. Now I don't have any trades, okay? But I'm just showing you. And let's just look as we're going along here. What's this? Resistance. Resistance. Microstructure. Resistance. Resistance. Where's the stops? VWAP in mid. Questions, guys? I'm now coming up for oxygen. Apologize if you've been waiting in the wings. Hope you're getting something out of this. Questions? How we doing in YouTube? By the way, guys, if you're getting something from this, please hit the thumb up. It helps other traders to find this stream. There's no quote advertising, no Instagram. I don't do any of that. This is just for TraderLab and for those of you who visit in YouTube. But there's no cost for this. The stream, there's no cost. There's no subscription thing. It's all available. There's a link in the bottom of YouTube if you're interested in the Bookmap Discord TraderLab community. Now, here's the other piece. Let's look at the order flow. I see this is absorption. So right here, I have micro high volume. I break high. What happens here at the high of the day? Absorption. Do I know it's the high of the day? No, but I know already there's sellers here and they got taken out. So who's selling? Well, iceberg. Who's up here? Iceberg. If this, and this is support, because the buyers are here. Let's look at the logic of order flow. And I'm add a little spice because I use the auction. The auction is the volume. So if I come up here and I have my seller and I break away from it, where's my support? It's here. Why? Because the buyers absorb that seller and the buyers are here and here. If I break high, that's support, and I'm going wherever, except where's my target? That's a measured move. And you're all, if you're interested in the statistics that help define this, you're all welcome to visit TraderLab. When I break below this, which is where my buyers were, it means these guys are now under the steamroller. And you'll notice the buyers right here, the buyers here that absorb this seller. In other words, think Pac-Man. I'm selling it. Oh, yeah, thank you. What a bargain. Now we come up here. Sellers are here. What happens to these buyers? The opposite. What happens here? The buyers are here. The buyers are here. The sellers are here. Support. What happens here? Needs to go up. Breaks down. What is that? Resistance. The buyers failed. When I come back here, what happens? It's resistance. What happened down here? Well, I got support here, and I got my buyers right here. Right here. You see the absorption? Let's just look at the opposite. You got the absorption here. We come down. There's sellers here. You got some absorption here. All right. Resistance is here. I break down here. Support is here. I don't know. And I have my sellers here. That's the delta. Now, I can't tell anything. This is important right here. We got to watch this. This is called VPAC migration. Remember, I did a webinar on it. Very interesting concept. I came up with this, and that's where I got all kinds of pushback in many years ago. So this is a buyer. They absorb this. Support is here or out here. Resistance. No, could have stopped here. Didn't. Got here. What do I see here? Exhaustion. Sellers. Now right here, here's what's going to happen. Maybe. I got to always say maybe because I can't predict. We're going to push off, come back here, or fall below it, and that opens the door to take this out. Mid, VWAP, whatever. So let's watch the behavior. This is very important. We are in fractals. So these are microstructures, and they're the same thing in a very micro time frame, as you think of them, as this. This is the highest volume, this yellow line, for the whole day, and it's up here. Think of it like shopping. That's the new retail price. In the microstructures, these are retail prices, and if they're too high, I'll leave them. If this is too high, I'll leave it. Now, the thing, of course, about trading is it can do anything and abuse you. This could be a long to there or to there. This can be only pull out to here and rotate back here, or this is it, and now we're going to blow out all the stops that are down here and go to VWAP and mid. It's one or the other. If you are a trend follower, quote, the trend is up, you would not be taking shorts. Okay? If you trade both sides, you could be trading long and short, The thing about it is we are outside of yesterday's range somewhere. Yes. So the shorts might be what you call a bit of a do you feel lucky? The Dirty Harry thing. Do you feel lucky and make my day and the rest of it? This is called a low volume node. I'm going to label it, and I'm going to explain what you're looking at, because we're looking at multiple time frames. And I always have to add, I don't use time. I use something I call fractals. And if all a fractal is it's not time-based, it's behavior-based. So whatever time it takes for something to happen, that's what counts. Not, I need 2 more minutes before I can, interpret something. So I interpret the following. In this microstructure, because the buyers were here, it was too low. Right there. Now I'm just going to mark it. But I know I don't have to, I'm marking it so you can see it. Because, and what adds to this is I had the selling delta and I had the absorption. 1,800 buy icebergs and more and sell stops. So this sets up a potential long to here and to there. Resistance. So resistance, resistance. Now what? VPAC migration. the following possibilities exist. If I can get back above here, I can come back, either to there or to there. There's stops here. So the idea would be to come back above here and here, if this is your trade. This is a very funky area to participate in. This is where the buyers were activated, that's support, and this is like an over-under. This just shifted down. We have to clear that to go there and potentially there. Well, let's watch it together. Too low, right? Resistance, potential continuation long, right? Resistance is here, stops are there. So you want to scale. If you take this trade, I'm not saying anybody should, I'm just saying if you're in Trader Lab, you would understand either you do nothing here or you would put a long on here and you would scale here, and then you're looking at this. Let's see the behavior. How we doing? How we doing, YouTube? Oh, Lex, you asked me about the icebergs. Yeah, but the icebergs are what's really cool about Bookmap is it uses MBO data, or doesn't have to. Market by order data reveals the tags that the exchange uses. So what's a limit order? What's a stop? What's a market order? What's an iceberg? So we can see the icebergs. They are limit orders. So instead of just seeing a red bubble or a bar or a candle and not knowing what's going on, with Bookmap, remember where we're trying to go up here, right? Now, so this could be a long, and there's something else here, the IB high. We have a structured trade in the Trader Lab called the IB continuation trade. You've seen me be taking it a couple of times. So the long is here, IB continuation trade, up to resistance, pull back. If you don't take this out and you get this, it's another long, and this is your resistance. It's the high of the day. What do you do here? How about taking a profit or scaling? Least you would do is get risk neutral, and then this is resistance because it's the high. Now we might not get here. What do you want to do? Maybe we might want to manage this trade. Maybe we want our stop under here or under here, this microstructure. And then we have this. And you could be done with this trade. See, if you're someone who trades short time frames, you could be just going like from here to there to there. Or if your other traders are going to trade a bigger swing. So they're just using these levels for scales, and then it's a trade management process. Let's go take a look. See if we got any. Let's just take a look at something here. So where's our resting liquidity that's been in the book? Well, we got some at 30, another strike price. If we can clean out this liquidity, which is about 480, this is called Trader Map Lite. What it's doing is it's filtering out the algos so I can see the actual resting liquidity. We got quite a bit of liquidity sitting up here. So if I'm using Bookmap Orderflow and I'm looking at resting liquidity, right here you see they are adding here 150, pulling a little bit down here, adding above. So we don't know, of course, with liquidity, what's going to happen. Is somebody going to front run and all of a sudden throw, 500 contracts in here? Or as we approach this, because are they going to pull? So we can watch the liquidity here. Now, I'm not trading off this. I'm using this for additional insight. Remember what happened here. Sellers hit it here. These are the icebergs. Icebergs are limit orders. And what they do is an iceberg order basically pays a little extra to get ahead of everybody in the queue. So if you've been sitting here with a limit and an iceberg comes in here, he's going to go to front of the line. And then you're going to wait to get filled, assuming if you're going to sell that there's enough limit orders left in the book If you're selling, I should say, you need buyers. So if whoever's at the front of the queue gets filled first. So the icebergs, they get taken care of. They pay a little bit for that. See the difference in how the heat map looks? This is because this is a bracketing algo. So this bracketing algo is noise. Remember, this was our target. Who knows? And again, there's more targets up here, but statistically, this was our, and this is like, you guys with me? This is trading a trader lab. Jose, I can look at the NASDAQ, but I'm not currently trading it anymore. Let's just see what it looks like. Whoa. See, I need a filter for this because of, let's go take a look. Now, the NASDAQ, as you guys know, well, let's look at the similar behavior. See, I don't have any of these levels in here, so I can't really do justice to it. But if I was going to look, yeah, I don't have my level, so I'm kind of in the dark. But if I just read it, let's look at this. Let's try to read this. Support, and that's what this is. Let's see. Support. So you got everywhere there's a little high volume is an auction. Consolidations are auctions. Chop, 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 break high. The outside edge here is support. 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 It's all sequential. I'm using fractals. Now, I don't trade NQ anymore. I used to be a high volume NQ trader. And this is going back in the dot-com bust. I mean, I would trade 100 times a day. It was pretty manic. And NQ is really I don't think NQ is a good market for developing traders because of it's thin. So when you look at the order book, you'll see there's 10, 12, 13. So that means if you're using a stop or you're buying at the market, there's a big spread. So, and it's depending if you're trading the full size, it's, I think it's $5 a tick or something, so, you blink your eyes and there's a lot of dollars at risk. And you'll notice where we just came. Where's support? It is, I'm going to open it up. I don't usually do NASDAQ, but it's all the same. I mean, it doesn't matter. What I share in TraderLab, and the reason I do what I do is because this process, the auction, is generic. This is how markets actually work. So that's why I say, indicators, guys, you could be spending your life trying to get something to fit that is called curve fitting, and it doesn't work. Where is the truth of the market? It's right here. Because these guys are battling. It's like, oh, it's on sale. I'm not paying that. And then if we break away from it, the volume in here is support. See what it is? Now, up here, where's the volume? It's here. Break low, come back. It's resistance. How about here? Too high. You can see the little node right there. Break low. Well, the outside edge up here is resistance. Here, volume. Break low. It's resistance. It's right there. Support, resistance. Support. So depending how you want to do this, you can operate in any fractal or time frame. And I always say I don't use time. I use behavior. If this is, now I don't know, this is too high. Notice a change in behavior. I come back. Volume is here. I break low. That's another trigger. Where's my resistance? It's there. What's going on here? Resistance. Where am I going? Lower. Does that make sense? Anyway, I hope that helps you with the NQ a little bit. So for me, either out of a long or subject to my plan, a short, or none of the above. Notice where we went. Now, we were talking about this liquidity that was sitting in the book, right? What did they do? They pulled. They pulled. They pulled some of it traded. Here's the selling. This is another structured trade. I got to show you this. This is more advanced. Let me explain this one to you. Because there's many different pieces and I can't, all I can do is share ideas with you and things that I educate in the Trader Lab. I mean, I can give you some ideas. So this is where our liquidity was, right? On the other one I just showed you. I have sellers here and I have my selling icebergs here. I have my buy stops 605 and I have sellers. Now I've got sellers here, sellers here. What's important for me is the structure, the absorption. This is now a stop sweep. Another pool tells me an excess possibly. So this now is support. There's my buyers. Where's my sellers? Here, I'm seeing the icebergs, and there's actually a little more I can talk to you about right here. Now, I'm going to take you into something a little different because I can't go into everything, so I'm just going to give you a little spice. Stop an iceberg detector. Sellers, 604 buy stops. Oh, the pain. Don't ask me who's selling it. Wasn't me. Now, here, I come up here, and what do I see here? 15 buy stops. Now, the only thing I use from indicator world is something called divergence. Stop divergence. 600. I come up. So who are my buyers? Well, buy stops, there are buyers, delta, and we interact with liquidity, absorption. So I got a confluence of elements. And again, no clue. Come up again, 15 stops, less divergence. And this, going to the moon, divergence, icebergs, break low. Where am I? I'm below this level. This is a structured trade or exit in the Trader Lab. This is a little more advanced, and this sets up the following. And you have this, break low, short, break low, test, short, if you're a counter trend trader, or exit and you're sitting back in your Barca lounger. Questions, guys? And thanks for your patience. Anyway, I hope that helped you there, Jose. Thanks for the question. And I also hope that you guys who are visiting in YouTube are getting something from this. And please hit the thumb up there, like button. Post a few comments if you like. I'm always interested in your thoughts and how I can help. And the other thing is visit the Trader Lab. There's no cost. And there is a link in the bottom of YouTube. VPAC migration. This is important. Now we're going to watch this. We come below here, then potentially here. We can also come back here. So let's watch this behavior. I did a webinar on VPAC migration. You guys don't want to miss that one. It's in the Trader Lab library. If you want to understand this, there's a whole library of webinars, and you can access these, and there's no cost, as well as the 60 PDFs of structured trades that I share. And these are available also. Actually, circles, arrows, and descriptions. And there's no cost for any of this. There's 60 of these things. Orderflow phenomena. This is the actual trade I had on that I was short, and this algo changed its behavior. It raised here, and notice how it pulled. This is saying, uh-oh, there's my exit right there. And the market went wham, slammed up. I got out. Why? I could read the order flow. Is that a tool that might help you? This is what Trader Lab is. It's a number of components. Now look at this. Remember? VPAC migration. Resistance is here. Let's see. So counter trend would be to here. And then either it comes down here or it bounces here and comes here and maybe higher. No clue. Someone just posted in Trader Lab 33 is 2 times the IB. Is that right? Where'd that come from? Oh, Nikos. Is 2 times IB 6033? Resistance? VPAC migration? This is that structured trade. Again, you have to be familiar with these and you got to understand what this is all about. If you took along here, this is your scale. And by the way, Trader Lab is 33 2 times IB. Could you confirm that for me? It is? Okay, thank you. Lexard, how often spoofing occurs? No idea. 3275? Yeah, Ed, I can't see your chart. Can you post if that's what you're responding to? Remember what I said? I said if you trade counter trend, or do you just want to take trades with the trend? I always suggest the trend. Old saying, you've heard this. The trend is your friend. 3275. Okay, thank you. Now, none of these are trade recommendations, guys. This is just, when you're out in thin air, you have nothing. You really have nothing except measured moves. And I'm not a big fan of measured moves, but you got to do what you got to do. When I first learned trading, uh, attempted, it was all bar chart, charts. So and it was the head and shoulders and, all those kinds of triangles, pennants. So that's all measured moves. So I thought early on that the market was measured move based and predictive. So that's what kind of sent me down the wrong path. Because then when I got into indicators, I kind of came with the belief that it's about prediction. So I kept curve fitting. And then when I built systems, and the problem is that things work. I mean, you can be profitable and then it breaks down, and then you fix it, right? Make it better. And what that is curve fitting because you're trying to get it. So when I built systems, I extrapolated this concept of measured moves and predictability and probability, but it was curve fitting. And what you do in system design is you go backwards with a data set, do your thing. And I actually work with Ralph and Bill Cruz out of Miami. They created, this is before TradeStation. They created TradeStation, but I did work with them on a end of day product that was the predecessor in their quote easy language. A cast iron frying pan to the head would be probably easier, but before there were functions and things. So there was a lot of math involved and you had to really write the code. So I was writing code and optimizing these things. So I'm just letting you know, I've kind of been there and done that. So there was a lot of data set and it was very difficult because there was no real-time data. If you wanted data, you actually had to buy it on a floppy disk. And and at the time, short term for me as a position trader was 15-minute bars. So the software would see the 15 minutes as the end of the day. So I was, anyway, doesn't matter, but I'm just telling you, it was archaic, but that was the best there was. It was state of the art at the time. And if you guys have heard of TradeStation or are familiar of it, it's kind of, So, and this is before they created, I think, I'm not sure when they created Omega Research. I don't know if it was named that at the time. It might have been, but, and before that, they were actually selling black boxes. Black box was something where you just paid somebody, they sent you something, you plugged it in. You had no idea if it worked or how it worked. They'd show you some track record of how this thing performed, and you had no clue. But at the time, they weren't required to show actual track records. Anybody could put anything out. This is before, the regulations got changed. Just fun facts. You guys have further questions, and please give a thumb up there in YouTube. Like, as far as spoofing goes, theoretically, it's not legal, but you can put an order in and cancel it. And the thing is, there's millions and millions of orders coming and going in the book. You know, algos are adding, canceling, moving, doing this, that, and that, and you don't even see it. We don't see it. It's all happening under the hood. Now, with Bookmap, we can get into nanoseconds, literally, and we could see the individual orders. I mean, how fast do you want to go? You know, you could see it, but there's an order, you see, and then we can see it. But I can't do anything with this. But Bookmap detects the orders. You see them? So as we can slow it down, you see. And all it's doing is we're just putting these orders together. But if I open this up, I can see the individual orders. Now I have a filter set so you don't see bubbles everywhere. But this can give us a sense of how many actually traded here. Let me see if I can see. Oh, no, I haven't looked at this in so long, I don't remember. I cannot see the exact number. Maybe I can see it up here. I don't know if I can. 85 ask. Actually, I'd have to change my bubble settings to see all this micro. But here, there's 36. My filter is 35. I won't see any of these. So 35 went off here. 63 went off here. 35 sell, 63. And then it aggregates them, so it'll put it together. Because I don't want to see all this. I want to see where most of the delta is. And you notice it's on the buy side. Sellers are here. They got absorbed. Sellers, they're absorbed. We're going higher, right? And one other little piece. Now, this was our last long, I think. Yes. And what was resistance? This. Then what? What happens to this? So resistance, support, resistance. Where's resistance up here? It's in the micro. It's right up. Let me show you. So this is microstructure. And I don't like to get, well, I know the high of the day is here currently. If I get long, it is common sense to take profit ahead of the high, potentially get a counter rotation, and then exceed the high or not. This is a function of trade plan for you. I know this is support. So if I get long here and scale here, I'm going for a new high a day, and I'll be trailing my stop under this volume because we broke above it. This is now support. There you go. That's it. And if I wasn't streaming, it'd certainly be long. You have this to this. You got this to this. And don't forget our potential target. And this is just, the Hail Mary pass, because who knows? These are measured moves, and that's all you got. So that's not a recommendation, but this is the structure. And when the structure changes, I change or I use it to manage my trade. If I take a short today, I'm Dirty Harry's got the 357 Magnum pointed at me. The trend is up. So in the Trader Lab, your choices are, if you're a counter trend trader, good luck with that, and maybe you have an edge. But when you're out of balance, new all-time highs, shorts are not a good idea. What is a good idea are continuation trades and trade management, always. So if I get a sell here, do I take a short, or do I exit my long and look for a place to re-enter? That's what you can do. It's all up to you. And this is Trader Lab trading. If you're interested in Trader Lab, there is no cost. There's a link in the bottom of YouTube. You can visit Trader Lab. All you got to do is confirm your Discord email address. There is no cost to do this. And there's also the Trader Lab community, which is a serious community. It's not romper room. In fact, this is what I posted this morning, about what we might anticipate on the open. It was 7 something this morning. Let's see where we are, what's going on in there. So this is the Trader Lab. There's all kinds of stuff. Thanks for posting that, Ed. This is the target, 60, 25, 75, which was our target here, right? There. That was our target. Now we have another one up above. So this is Trader Lab, guys. So if you're interested in the community, and this is serious. It's not romper room. It's really about the business of trading, building a business, understanding how the market works, why it does what it does, and how to get in alignment, and only interact when you have structured, vetted trades. And the idea of a vetted trade means it has a statistical probability. Remember, we're overlaying trading on what it really is, in my opinion, and that is gaming. How do casinos operate? That's a proven business model. It's done really well. So if it's done really well and we can overlay what we do on top of a business that is successful, then maybe using the same process, we have the same opportunity to extract dollars from the gamblers, if you will. And that means we also pay the gamblers. And how does the casino handle that? It's overhead and costs of production. How do we handle it? The end of the world, because we're emotionally attached. How do you separate your emotions from the business? That's an obstacle for us because we're human and there's chemicals at work in our brain and everything else. Support. You could be out of this trade here, it doesn't matter, to scale, new high. So what is your time frame and range? This is another question. There are traders in Trader Lab. They'll be long from here and they'll go to lunch. Other traders are going to look at this and they're going to exit here and they're only trading this. So if you're a quote scalper, which is not what I do, but that's only because I'm more inclined for this or that because I have structure. And then if I get taken out, I'm out. If it comes back above here, I can put the trade back on. That's a different trade plan. You see? But other traders I know are interested in this to this. Get through there to this. Break here, support. Stop could be under here. Come up here, resistance. Stop stays under here. How do you know what's right for you? It's not complicated. It's only random. And then what you do is you create statistics over a large sample size of random distribution of outcomes, because it's not this last trade that determines how you go forward. It's all of them. And then statistically, in spite of what might happen right here, right now, that what process gives you the overall highest expectancy or net. If you don't know that answer, you're sitting on the other side of the table with the gamblers. And of course, I can't say you'll be profitable or be successful in this business no matter what you do, because this is not for everybody. But I can assure you, if you're doing what other retail traders are doing, it might not be realistic to anticipate a different outcome. And again, that's up to you. Please give a thumb up and a like in YouTube. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, and compare to what your read was of the market. And the idea of Trader Lab is to build a business. And the business takes work. Nobody can do it for you, but you can get a lot of support in Trader Lab. Our senior trader has over 50 years experience. Me, 45, managing dollars, trading professionally, and also now sitting out here with all of you. Appreciate you visiting the Trader Lab. Please leave a comment if you're in YouTube. Hit the like button. Subscribe. Also, if you do come to Trader Lab, there's a lot of additional education available at no cost. Stocks, options, crypto, of course, Orderflow with a high-tier tool like Bookmap, swing trading, option mechanics, market maker behavior, algorithmic behavior, and a lot more. And you're all welcome. And don't forget, in the Trader Lab, there are 60 PDFs of these structured trades I've been sharing here that you can download, reverse engineer, and come to Trader Lab, and then you can learn, if you're interested, how to start putting the pieces together and maybe differentiate yourself from other traders. And of course, past performance is never a guarantee of future results. You all know that. But I think the Trader Lab might be a terrific place for you to visit on your journey. Thanks again, guys. This stream will be available for Trader Lab participants to review over the weekend, reverse engineer, screenshot, and add the trades to your binders of trade plan. And thanks again for being part of the Trader Lab, and those of you who visited in YouTube, thank you also. And I look forward to meeting you in the Trader Lab.